Hello, everybody. Welcome to week 38 of 2025 for the Bill Weekly Roundup. You've got myself, Cameron Otsuka, and Matt Dines back here with you. Coming right out of the Fed rate cuts. So I think most people in the U.S. have probably, or globally, have probably already heard about these rate cuts. Matt has some interesting kind of deep dive into the Board of Governors, and I think that'll lead nicely into discussion around the dot plots. So stick around for that for sure. And then we'll get into some news that I think is really interesting going around, specific to the U.S. and deal making, and then we'll round out today's episode with what we're seeing in the Bitcoin space, or should I say Bitcoin adjacent space. I think there's a lot of froth going on, things that are happening. Maybe it's a little bit difficult to understand, how it's actually impacting what you're seeing. So excited to get into it today. So with that, without further ado, let's just dive into it, Matt. I'm gonna flip us over to the slides here. Hang on, there we go. So just I think a good starting spot for explaining what's going on with the Fed. You've heard a lot of talks about Trump saying, "Hey, I need rate cuts. I need rate cuts," pressuring to try to fire Lisa Cook. I think even today I saw some more news around that. So, maybe Matt, can you walk us through, the history of the Board of Governors and really just what you're seeing and how this relates to what we're seeing today with Trump and Board of Governors, dot plots, all of that.
Yep. So if you're just reading the front page of your Wall Street Journal or Financial Times, something like that, and trying to get your cues for what's going on, just kind of the first take of all financial media, for the most part, there's a lot of pearl clutching going on about Fed Treasury independence and just essentially yeah, just like viewing this as a threat on the integrity of this public service institution, from the perspective of mainstream journalism, of what's essentially monetary policy set for the American people. You'll hear this in Jerome Powell's press conference as well yesterday. It's really presented as, hey, this is an apolitical institution. We're doing our best for the American economy, the American people, all of that. That may be true, like none of these people are directly, I would say against the American people, but it's always been a political body ever since, you could say, the founding of the Federal Reserve under the original construction, like the 1913 structure, which was just the regional bank branches, 12, I believe, who would kind of operate in a kind of federated way as a centralized regional counterparty for the banks within each specific region, and then those Fed regional bank branches then would interact with each other for direct settlement. But then in the FDR era in the 1930s, you got the kind of Federal Open Market Committee and the Board of Governors bolted on, which was basically this Washington, D.C. office, which is now resides in the Eccles building, also subject to kind of like a cause for complaint. Recently, remember this summer, talking about the multi-billion-dollar,
Right,
building facelift, right?
right.
That
The
one's
renovations.
diminished. Yeah, the renovations, that's diminished from the scene. That will pick back up if things don't go the way that the Trump administration wants them to. Put that one on pause for a second. But ever since the governance structure changed on the kind of, let's call it Fed Classic, the structure it operated under starting in 1913, going until the Great Depression, and then all the New Deal legislation and restructuring of these institutions, I'd say, to be more centralized around Washington, D.C.'s authority. That's exactly what you saw with like the addition of the Board of Governors, in the 1930s. So the way the structure of the Fed works, right, as opposed to having the regional banks just kind of consolidate and interface with each other, with the FRBNY out of New York being the granddaddy of them all, the biggest gorilla, the 1,000-pound silverback, right? But just because of New York's central role in American capital markets, that was the old model, right? But in the FDR era, you saw the Washington, D.C. Kind of institution bolted on and centralized. So this process we're talking about, the politicization of the Fed, the joint merger between Fed and Treasury, right? That's been with us for almost a century now. So this kind of pearl clutching you see going on, um, about the kind of nominations to the Board of Governors. We, saw the big event this week with Stephen Miran confirmed by the Senate. Um, it's a political process. It always has been. And just to give an overlay of the governance structure, when the Fed meets for their kind of every other month or so, there's about 8 FOMC live meetings per year. Where they will adjust policy, right? And most people see that through the changes to the short-term interest rates, money markets, overnight. That's how they predominantly influence policy or influence financial conditions. The way the votes actually works, you've got 12 members on a board. That's what's in the background here in the sepia tone. This is a meeting in the Eccles building. You got a lot of people in suits and ties around the room, going over, whatever their MATLAB projection models showed about the DSGE model and where GDP is going to be, where inflation is going to be. It's kind of a situation. The map is not the territory, but in their framework, it is. And the way the policy gets implemented is you have 12 votes. There's alternates who are from the regional Fed branches, the presidents of the regional Feds who are not on the rotating committee, who will be among those 12, which changes on an annual basis. But of those 12 votes, 7 of them are a political appointee, right, from the executive branch. And then the executive also nominates the key roles, the chairs and the vice chairs, to essentially lead the board meetings. If anybody's taken part in a public or private board or public-private type of institution, this is just one of those. So in terms of the governance mechanism, you've got majority control in Washington, D.C. The banking industry, the financial industry, they have 5 out of 12 votes as to how monetary policy is conducted on a kind of live meeting by meeting basis. They're not necessarily in control. They're an influencer. They can make waves, but the banks themselves are, I'd say, semi subservient to the politicians, and it's always been that way for nearly a century. So if you look at the board composition right now, this is from the Wikipedia page. I blacked out the terms for the chair or vice chair roles, because those are like, who gets to, hold the gavel, if you will, at the meetings, call to order, structure how the meeting itself is run. But in terms of the 7 votes, those are the ones I left, unhidden, if you will. And you can see each one of these members has a party affiliation. You see, so right now it's 4 Republicans, 3 Democrats. You've got, with Stephen Miran onboarded after Senate confirmation, I think it was Tuesday, it passed 48 to 47. Only notable vote I would call out there is Lisa Murkowski from Alaska broke ranks with the Republicans and voted nay. Otherwise, it was Democrats just across the board nay. All of his yays came from Republicans. And then there were 5 abstains, some pretty interesting ones. Senator Lummis was a abstain. This could just be for scheduling. You don't want to read too much into each individual vote without knowing exactly what's going on or if there's actually a there. But yeah, Cynthia Lummis, Bernie Sanders, Rand Paul, a couple of the notable abstain votes. So hard to know exactly why each individual would not do that, but yeah, it was kind of one of those things we've seen over the last 10 years or so, where these Senate votes come down to just almost unanimously, it's just split party line votes. So Stephen Moran is in. That's on a stub term. These terms, the way they work, so those seven FOMC Board of Governors seats that give the majority on the FOMC, they're actually staggered to expire every 2 years, and they're 14-year terms. These are like massive, long appointments. Like if you think about Supreme Court justice appointments being the longest, which are like lifetime appointments. There's other appointments much shorter. 14 years is a long term, and in general, like it's a rarity to see someone finish out a term in full. There's a Wikipedia page we could go through all the appointments, look who actually serves a full 14 years. It's harder than you think to actually do for someone to write it out. People just they want to retire. It is a political role. You do have to backfight, or you have to deal with political backfighting, all of that stuff. Your your faction that's backing you, both political and capital backers, have to be, on the up and up as opposed to out of power. So there's all sorts of things going on here. And what I want to get across, it's truly a Game of Thrones, like how monetary policy is set. Um, Overnight money market conditions, 12 years, or sorry, 12 months and in for funding financial institutions, especially like the large global money center, banks, broker dealers, all of that. That will guide ultimately where policy needs to go. But how it gets there or who gets what, it's always been a political scramble, if you will. So right now you've got go back once more. I just want to go into the lay of land here. So we talked about Stephen Moran. Jerome Powell's is actually the next up to expire in January 2028. That's his governor seat. His appointment as the chair is what's expiring next May, I believe. It should be mid-May. So his term as chair will actually be up in about 9 months. Governor, though, he can stay on if he wants to. Yeah, you found it, Cameron. Good. If he wants to, he can stay in that seat for another year and a half almost. He does kind of report. He claims the Republican hat, which gives the Republicans a 4-3 majority on the FOMC. We'll go into it a little bit deeper here. There's been a big transition in the Republican Party ever since, Trump kind of made it his own, starting in 2013, 2014, and into the 2016 election. Jerome Powell he's a legacy Republican, I would call it. He was actually appointed to the FOMC by Barack Obama during the Obama administration. The way I view this, he's almost from a different guard. He's from the old version of the Republicans, the ones who used to have power, who no longer do, versus those other four on the FOMC of the seven, which would give you a majority. So if you look at Stephen Moran, obviously Trumper, he's actually in the administration right now on leave, right, from his role in the executive branch. Michelle Bowman was a February 2020 reappointment from the Trump 1 era. And then Christopher Waller as well was a Trump first term appointment. And then the remaining three, Michael Barr, Philip Jefferson, Lisa Cook, they are Biden era appointees. They're now in the minority. And this is just where, the Game of Thrones sits right now. So Cameron, if you go to the other one, we've kind of drilled it home. So that 4 of 7 Republicans gives you a majority within the Board of Governors. But to get policy actually done, you have to win over the influence of the 5 seated members on the FOMC from the regional bank branches. So the Fed regional branches, St. Louis, Kansas City, San Francisco, et cetera. So to actually get a majority, if you're the 4 Republicans right now being led by Jerome Powell, you have to get at least 3 of the regional bank branches along with you for the ride, for whichever direction you want to take things. Now, in the extreme, you could have a political majority at 7 of 12, and Washington, D.C. could make monetary policy, uh, like direct it towards the what the DC establishment wants to do, or the bureaucracies, or the executive branch, as we'd call it in our framework. If you can get all seven members and you have the political sway to do it, DC can force the banking system to do what the U.S. Treasury or the public sector needs done. That can happen. We're nowhere near that at that point. At this point, there's still too much infighting for those seven Board of Governor seats, that you're seeing kind of play out in the headlines more and more, as this administration works through its first year and we head into midterms. But just to highlight here, so with the what you're seeing right now with the Lisa Cook situation, there's obvious political pressure being waged to force her to resign, and it went beyond just calling for someone to resign and peacefully walk away, which is what you saw with Adriana Kugler in August, right? Just peacefully walked away. It was a stub term, as we mentioned. It's got about 6 months left on it anyway. That one, you're just like, this is not worth it for me. I'm not going to get into the public fight. I don't want to do this. Walk away. So that was like a what's it called? In the military, I'm trying to think of a term, retreat, whether it's for offensive or defensive strategic purposes, just whatever, retreat. But what you typically see in a 4-year term for a president, you usually see 3 of these seats resign, right? And I just went back to Trump first administration. We saw 3 Obama era appointees to the Board of Governors: Tarullo, Stanley Fisher, Janet Yellen. Everybody knows Janet Yellen's name, or they should, as an important. If this were a movie, right, and you're looking at the credentials, her name wouldn't be like in one of the top 5 leading roles, but she's definitely played a part if you're making a NARA of the post GFC monetary picture, right? So you saw 3 of these resignations in Trump's first term. And then who gets reappointed? Trump puts his appointees in those seats. And then you saw it in the Biden term as well, with Randy Quarles, Richard Clarida, and then Lael Brainerd was you'd call it a home team. She was a Obama appointee, resigned from the FOMC, and took a role, I want to say, as the like economic advisor. I'm trying to think of the exact job title, but essentially it was that economic advisor role for the Biden administration. So she left FOMC, moved into the executive branch, like went to the White House to work. That was one of those home team splits. And I think from that, you see the start of a transition. Same way the Republican Party went through a transition of its leadership, who had control of the ship, which political faction, which capital faction was in charge and steering things. I think that if you read it, that Lael Brainerd decision in February 2023 to resign, and you saw the replacement appointed to those seats. You saw both Philip Jefferson and Lisa Cook come in, Lisa Cook being in the headlines now, to fill those vacancies. But same thing with Quarles and Clarida. The political levy that was made against them was on their kind of personal trading activity in the COVID era. Remember Q1 of 2020 wave, right?
Yep.
So you can look into these. There's more story underneath the story. All of these have a grain of truth. Some of those trades were more obscene than the others for one of these individuals versus the other. I'll leave it on you if you want to go trace those threads. But essentially, it's the same thing. So if you go to the quote in the Stalin era, from Soviet jurist Andrei Vyshinsky, right? For reporting to, as we all know, these kangaroo courts, whatever. Quote, give me the man and I will show me the man and I will show you the charges, right? It's just, if you want to make a case against somebody, you can always do it, like from the state's perspective. And I think that's exactly what we're seeing right now with Lisa Cook. This goes public, and there's like serious trenching going on. She is not going to leave quietly. Trump is trying to get his kind of three board flip reversals on the FOMC when it's very clear that someone doesn't want to give up those seats. Um, but that's kind of the same thing we went to. So the case, in the case of Quarles and Clarida, was built on what they were doing in their own stock brokerage accounts, and they left quietly, right? Lisa Cook, you've got a different case. It's gone into mortgages activity. If you just want to keep, if we want to keep digging here, we can go forever. But my point is, like, this is a political board. It's always been that way. So if you see part of this narrative, I mean, the trends, treasury yields, de-dollarization, what's going on in the DXY exchange rate, the fact alone that there's political movement going on the FOMC isn't necessary or sufficient to describe, those trends we're seeing in DXY and treasury yields, and then you could say sovereign bond markets across the world. This, in my opinion, is just normal political jockeying for control of the FOMC, but it's becoming more and more important, each era. So the state of things, the board structure, all of that, what goes on in Washington, D.C., it's always been this way. I think it's just become more and more urgent given the sovereign debt situation, the fiscal situation, all of the above. So it's a highlight for the background.
Yeah, I think that's a
The
critical
title,
point that you put out there, just for everybody to re-listen to that section, because that's really important, I think.
these have never been fully on public service institutions or utilities. They've always had a political basis, and that's how they've been structured. They're a political animal, and that's how U.S. monetary policy is conducted and always has been. All right,
So then, how does this
so
play out into what you're seeing in markets, right? What you're seeing in
yep.
rates, and I think that's what you're going to explain here. Then,
Yep. So next, yeah, what we're going into next is so the title of the episode this week is Dot Slop, a play on the dot plots that have been produced since about the 2011s, 2012 era during the Bernanke Fed post GFC. They wanted to start giving these dots to show where each FOMC member sees short-term interest rates that really set financial conditions for funding conditions in financial markets, and how those play out over the next 3 years. And then longer term, they give a data point, and they update this from meeting to meeting. So most people will already be familiar with the dot plots. What we've seen in the dot plots, as the Trump administration has really dialed up its jockeying for those FOMC board seats, you've seen a big movement in terms of the downward direction of taking short-term policy rates, where he really has indicated he wants them to go with his jawboning that we've seen in the headlines. So like you see the pearl clutching, hey, this Trump is trying to do the takeover of the Fed, the monetary policy. Look at this, look at this king, look at this dictator, look at this autocrat. This is something literally every administration does. Like, it's a process. They work their power and influence into the FOMC board. This is totally normal. Like, this is not something unique to Trump. It's something I want to get across. This alone doesn't make us, a banana republic as everybody's presenting. It does highlight the acuteness of each time a presidential administration goes through this process. It is making us more and more, resembling to a banana republic in itself. But it's not only Trump, is my point here. It's baked into the entire process. So these dots, if you look at them for 2025, and we'll zoom in on those in the next meeting to see the historical development, You can see the different factions on the. I mean, there's like 18 dots here, or like 16. Only 12 of them count as a vote, right? Because you've got a bunch of Fed regional banks who only get to, they can show up to the meeting as alternates in any given year, but it's only once the calendar hits their rotation that they actually get to count their vote, and it'll influence how policy is set. So you can see the coalition's moving here, and the general direction is for 2025. Those numbers are coming down, right?
Yep.
And then you got that extra pressure, that really low vote here between 2.75 and 3 for where, and this is for the year end 2025, and there's only two more meetings, right? There's October and December. Um, this is obviously Stephen Miran's vote, right? I mean, 99% certainty. It's not disclosed who these are. It's kind of like blind uh, taste testing,
Sure.
if you will. That's totally Stephen Miran's vote. He's new on the
Seeing
committee.
this
We're
like
going here.
didn't
Yeah,
somebody have like a
exactly.
negative vote back in the day too? I forget. I might be misremembering. I think there was like one time we had somebody put in the dot plots like a negative Fed funds rate.
Yeah, let's go back and look. So that would have been during 2020, 2021, and one of those members voted for negative interest rate policy. So we've got ZERP, right? That would be NERP.
Yeah.
Remember, like we saw negative yields in Japan and the EU. There may have been one, yeah, yeah, exactly. One member who was like, we need to go negative. We should try negative yields.
Right.
Doesn't make any mathematical sense, but or economic sense, but hey, let's try this out.
I think tastemaking is a
Uh,
good way to describe, right? It doesn't necessarily mean that's where they're going to end up, but you're seeing the spread, but you're seeing kind of the actual what actually gets through in policy being somewhere, tends to be somewhere in the middle across all of this tastemaking that's going on.
yeah. So for the longer term, what you're seeing at this meeting with the dots, that long-term rate, which long-term means outside of the next 3-year window. Like, where do you see these things after you've left the FOMC? Could be another one to think about it, right? Because most of these terms, what's the average that any individual member would finish? It's not 14. The average term doesn't get fully, filled by the individual. They get replaced, they resign, all of that. So maybe it's like 7, 8 years. We could crunch the numbers on Wikipedia, or that Wikipedia catalogs. But basically, yeah, longer term is like this is where things will go. R-starred, if you will, non-inflationary, stable labor market conditions, all of that. This is where we see that short-term interest rate going over the long term. Once everything settles in and finds their equilibria, you never actually get there. But anyway, my point is those expectations, the committee didn't change it, right? You can see some compositions there, some movement on where they see long-term interest rates. It's still 3% is what they would see, the ultimate kind of landing point that they get to for the median of those 16 to 18 people around the table at these FOMC meetings.
Right.
But the front end, first budge, we can go into that, what the 2025 and then 2026 has come down. If we go to the next slide, this is where that 2025 number has kind of drifted over time, right? So this is where the committee, or the FOMC, which includes the 7 board of governors, right, who get to show up every year and their vote is counted. This is kind of how the 2025 number has progressed over time. So if you think about this would be like a futures chart. So if you think about a gold futures contract maturing on December 31, 2025, that allows the holder to settle or like take possession or sell, right? Buy or sell, and settle a gold transaction, like physically. It could be any commodity. I'm just doing gold here. You've got the gold 2025 futures contract, but that thing starts trading like 5 to, maybe even 10 years before, and you can see the progress for what the price of gold to settle at the end of 2025 looks like. That's kind of what this thing is. This chart here is showing is what is that? Where is the Fed funds rate on at the year end of 2025? And this is where the board, saw that number. So you remember history, right? We were in rates going up, um, and rate hikes up until the September 2024 meeting, right? A year ago. Um, it went from June, at the peak terminal rate, they saw the 2025. They're like, all right, we're going to get down to 4%. That number came down aggressively at last September's meeting to, somewhere between 3.25 and 3.5 is the midpoint of the range. 20 over the course of the year 2025, you've seen those numbers hike up, starting with, what changed, right? Well, the Republicans won the election. You saw a new policy set coming in, and he's, had a whole litany of policies. Number one, as kind of the linchpin, was tariffs, right? So starting, with the developments as the Trump administration took office, the FOMC started to move their projections up for where rates would be at the end of 2025. Um, that's how we got that, steady pause, no more cuts from basically January through September this year. And now we've started cutting again, finally. So if you look at the composition of the dots from the June meeting box, the red boxes, see they've shifted down literally 25 bips. So you've got a 12-person committee. How do you get the votes to flip from no change to, hey, we're going to cut? Well, everybody incrementally has to come down, right? And you literally see the factions here. You see a group of like 8. They moved together, 2 people moved down, and then like 8 more moved down. And then these 2 on the low end, that's where you see a split. These are new people, right? So one of those is Stephen Miran. And it doesn't necessarily mean those 2 were the same ones. We don't know
Right.
how exactly everybody moved. But we do know Stephen Miran came in. He's replacing somebody. We don't know where Kugler's dot was. But Stephen Miran comes in low. And then you see one more straggler, 4.25 to 4.5. It's probably someone from the 8 dots in that group at the June meeting. Seven of them came down to that 4 to 4.25 range, and then one of them is a holdover. I'm not gonna like name names, but it seems like there's probably someone resentful who is a straggler who isn't seeing what the rest of the market is seeing. It's fairly obvious that rate cuts needed to happen, given nominal growth slowdown, labor market, all of the above. But let's just say if you were feeling like you wanted to drag your feet, you felt a need to not go along with the group. There's someone pretty obvious in there who's a good candidate, who you would think would be uh, extra motivated to go against the White House's kind of pushing for lower rates. I'll leave it for the audience to put that one together without naming names or making accusations. But that's what's going on. This is a board, to bring it home in uh, what what really looks like to be amidst a lot of chaos, right? Hence the title "Slop." There's a lot of things going on. Um, you've got Jerome Powell's term. Two big issues here on the next one. You've got Jerome Powell's term ending. He is almost certainly not going to be reappointed by Donald Trump for another term as chair. It's just not going to happen. Now the choice is, does he stay on as one of the 7 board of governors? He's kind of, if he does that, you're almost fighting for a lost cause, right? The war has moved, and he's representing a coalition. The Never Trumpers, all gone. Like they're irrelevant in the Republican Party. They're barely hanging on, just through just legacy political maneuvering. I mean, Mitch McConnell's already stated he's not running for another Senate term. He's very old, obviously has his own healthcare problems. Mitt Romney gone, exit stage left from the Senate. Um, so my point here is the old camp of Never Trumpers, like call it Republican old guard or 1980 to 2014 Republican classic neocon is another term for it, called a public service. But I'm just going to be completely honest, like call it the way I see it. Him staying on like out of principle for something he believes in, or if he thinks it's the right thing to do, um, you're really just the man standing in front of the bulldozer. In my opinion, these forces
Right.
are way too big. So I don't know that it makes political sense. And at some point, you know, you've done your time, you put in your public service, as they would call it. I don't believe this is qualifies. This isn't running for your local school board or your neighborhood watch commission or something like that. It is not that in my mind. Setting monetary policy. They're not the same things. But for what is what you would want to answer. And at some point, like Jerome Powell's in his he's over 65, right? So at some point, most common reason for resignation is retirement, right? People just get old and they don't want to do this. And, like a Dianne Feinstein until they're 94. You literally had to pull me off the Senate floor. Uh, Hit to pull the voting pen from their cold dead hands, or that whole thing. Um, I don't see any benefit to Jerome Powell doing that. So that's one, is what happens to that board of governors seat. That would actually swing your four Republican coalition from, let's call it three new Republican, one old guard, to four Republican. So that's one way you get the 4-3 and a more executive friendly board. And then the other one is what happens with Lisa Cook. And if you looked at
Right.
those 2-year staggering expirations, Lisa Cook's actually put in the longest dated one. It expires in 2038. So that's a long remaining shelf life on that seat, which is one of the reasons why there's such an aggressive push by her and her legal team to ride this out and try to maintain that seat, because it's still got 12 plus years of shelf life remaining. So it's in the words of Illinois Governor Rod Blagojevich, this is a very valuable thing.
Right.
That's how this works.
I mean, it just seems
Uh,
to me like you're trying to really like these are the dates that you're trying to affect moving forward, right? And so, Lisa Cook, obviously, like you're saying, but you've got all of these other ones too that are, non-Trump appointees that you're saying, if I want my policy to stay in place, I need to find ways to make sure that this is actually all, projected out into the future as well.
yep, it's all Game of Thrones behind the scenes. All right. So that's the dot slot, but we're not going to get calm until we see the Jay Powell or Lisa Cook situations come to a head. Um, when as an executive branch would you be satisfied? Like, you're going to keep fighting until you can get that majority to get monetary policy to go the way you want it to go and aligns to the rest of your economic policy objectives and political and, international trade and foreign relations are all combined. So this is just one front in that entire kind of process, or framework of this presidential administration trying to accomplish its own objectives. All right.
So
So to bring
speaking
in the
of,
other,
yeah,
yeah, speaking of those other fronts, we had a huge couple of events this week, both of them in Europe, but this is the deal or no deal kind of conversation. I don't know if you caught that on the triptych. This is topic number two. It's deal season, right? And you've got Trump with this might be, we're almost dating ourselves at this point, but the 2000s era show, Deal or No Deal with Howie Mandel. Interestingly, Trump was competing against that for ratings with The Apprentice and those other shows that were popular from the era. Probably did a guest host at one point or something like that. I wouldn't be surprised. But anyway, yeah, this is trying to get to the deal. You've got the key of what's going on these geopolitical discussions taking shape that we've cataloged on the weekly roundup, over the course of the year. But you saw Trump do a state visit to the UK to visit with King Charles and the royals, discuss terms for a lot of things, right, going on. And then you also saw kind of a press conference with Keir Starmer today. Um, and then on the complement of that, you're trying to do two deals at once. Think of like a two-front war, right? You're trying to negotiate with the UK Crown, right, and the Commonwealth for economic conditions for some sort of agreement between the US and City of London. You've got the other side of that, those discussions, U.S. negotiating trade with China, right? And those talks are taking place in Madrid. So what we don't know on the UK front are any terms coming out of anything that was agreed to or was progressed on specific topics of importance. What we did get from Trump in the press conference today was a sense of kind of a public statement of disappointment in Putin for the Ukraine peace negotiations, right? So kind of have to piece together through the tea leaves on what's actually going on with the U.S. UK on that side. But in general, kind of the tone coming out of that was pretty cordial, right? It wasn't adversarial. So if there was progress on something or certain things agreed to, we don't yet know what those were, but look for those shoes to drop in the coming weeks as we find out more, and then can piece together in retrospect what probably happened at those talks inside the castles and royal palaces and whatnot. And then in the Madrid talks, the U.S.-China front, you saw a couple of things. So going into that, you had China announced it was launching probes against U.S. semiconductor manufacturers, so Texas Instruments and Analog Devices. These are semiconductors like sensors. They're not quite as sophisticated as like the very state-of-the-art high-end like GPUs like NVIDIA is building to handle like AI specific computation, model training, inference, all of that. Um, and what China did was basically like with these semiconductor production and manufacturers and protecting kind of the market share of its own homegrown supply. And it tend to be state funded or state owned enterprises in the Chinese economy, how they generally do things. Basically protect those from the US based manufacturers and producers there who have, high single digits to low teens kind of share of industry in the Chinese market. So these semiconductors are kind of more legacy. These are, as opposed to like state of the art, single digit, low nanometer type of chip design. These are like 40 nanometer. They're kind of older, more mass produced, more widely known how to get things done. So essentially here, China makes an aggressive move, pushing against U.S. firms access or just ability to sell into its own China's own domestic market. Kind of similar to what we saw with the August developments for NVIDIA and AMD being allowed to sell into the Chinese market. Their higher end or cutting edge or more cutting edge GPUs with a 15% revenue share. So instead of a tariff, like for accessing, foreign firms accessing the domestic market, this was an agreement for U.S. firms to sell into the Chinese market. You call it like a reverse tariff, if you will. If you remember those headlines from just a few weeks ago. So this is kind of in retaliation, tit for tat, publicly disclosed at this point is the TikTok ownership. So TikTok under ByteDance, a Chinese firm, their apps in the that have access to the U.S. market. This has been like a football that's been kicked around for almost 10 years now, it seems. but it seems like they're nearing some agreement for ByteDance to sell its U.S. Presence for TikTok to a consortium of tech companies, which would be tech elites, if you will, whether it's
So
their
say I think it's like
individual
Andreessen
family.
Horowitz and yeah,
Yeah, Larry
Oracle.
Ellison, Oracle, etc. Um, so that's kind of the tit for tat. China saying like, okay, you can have this. U.S. has to give something up to China. What that thing is, we're going to find out later. But this is kind of the discuss. This is the development of what's happening on those U.S. talks with the China front. So still not in its long-term steady state. They're nowhere near done. But this is the latest um, in that sequence of events. Uh,
Yeah.
any any feedback there, Cameron? Any like how do you any color commentary how you see this?
I think the only thing for me is just the how big of an influence TikTok has, right? So for me, I'm a little bit younger. I've got friends or, siblings that are on that kind of younger age where most of their news is really it's TikTok, right? They're not watching Fox News for sure. And they're definitely not going to Wall Street Journal, they're not going to New York Times. They're just going through TikTok. Snapchat as well, surprisingly has kind of a news section as well. So, I think you're really just seeing a lot of this for older folks who maybe are seeing this saying, who cares about TikTok? Just ban the thing. Um, you kind of lose a lot of the younger generation if you just go ahead and do that, right? You're just
Yeah,
effectively banning the Fox News for a generation. So that's not really going to happen.
yeah. It was like oil in the 40s, 50s, etc. Talk about this analogy all the time with the book The Prize. Like you see the distribution matters, right? And that's what these companies, Shell, Exxon, et cetera, that's what they're in the business of, brings connecting supply with demand in your consumption markets. There's the same thing going on with, you know, information at this point and social media. So we've reached the point where oil and gas were in the 1950s, dividing up resources, Saudi Aramco, all of that. Um, that's what's going on in the social media, kind of like information technology space at this point. So roughly pinpoint where we are, we'll see. So how your economy is holding up, where your sovereign debt levels are, both in terms of like the debt stack relative to your GDP, consumer prices in the economy, and interest rates on the debt, all of those things become like key variables for how each nation state who's a player in this global competition can operate. So these are like we're in an era of conflict and upheaval, and so like how those things progress, like your sovereign debt markets or your central bank's monetary policy, those are all key linchpins and like highly uh, fought after things as kind of weapons in this bigger game as everybody's going after the prize, right? And what is the prize? Well, I think if you think about social media, right, the prize is the eyeballs, right?
Right.
Being in front of your audience. Whereas like, all right, cable news over to or cable TV and the cable news kind of distribution pipelines, took over your broadcast media or your, three outlet ABC, NBC, CBS kind of distribution that dominated from 1950 to mid 1980s. And then those took over, broadcast television took over from radio, which took over from telegraph and print journalism, like everything. So this is what everybody's fighting over. They're going after the prize. And when you view the prize as like, what are the key assets that everybody is going on? Like go over what matters to a society or a nation state. What are the valuable resources? But the key one that's developed and is extremely valuable, which I don't even think everybody's woken up to. There's a land grab going on for the 21 million Bitcoin as those become increasingly important as a base money for counterparty settlement and store of value. Um, Still, the cat's just getting out of the bag there. So within Bitcoin itself, just to kind of set the bigger backdrop, we're in a big bull market as Bitcoin trends up into the right since 2008, in my opinion. And then you've got individual, 3 to 4 year cyclical bull markets followed by a bear market. We've seen those in the past, the booms and busts. The busts have been aggressive. The bull run-ups have been also, maybe even more so aggressive. And since the FTX collapse in November of 2022, Bitcoin's been recovering and on like a bull market wave from like a primary measurement standpoint and the Dow theory, if you want to go down that rabbit hole. But within that bull market wave, which has been following, all other risk assets, right? S&P 500 bottomed the same time, roughly October 2022. NASDAQ, gold hit a bottom, selling off to like 1600s. So you can look, everything bottoms with the dollar credit cycle and October, roughly 2022, is on an ascendancy. Bitcoin is also, I believe, in a secular bull market wave. Now, bring that context into the more narrow, like 2025. Within a bull market wave, you've also, like, it's a fractal. You've got smaller bull waves and then bear market retracements, and then ultimately resuming the underlying broader primary trend, if you can call it that, like a bull market trend. I think there's something I want to call out this week. I think this didn't even show up on the radar for like your mainstream financial media, like your CNBC's, Financial Times, Wall Street Journal, that I will cite for your indicator of where your C-suite and chief investment officers, those type of people wearing the suits and allocating portfolios will see things. This story didn't even rise to that occasion, right? Or rise to those headlines. You have to go into the Bitcoin sphere or the kind of crypto sphere to follow this Bitcoin treasury firm development we saw this week, but really a bear sell-off that's been undergoing since June, right? And that's one of these Bitcoin treasury companies. You've probably heard of them at this point. This one's Nakamoto. It's basically run and sponsored by the same people who organize the Bitcoin conferences. They have a venture investing arm. They've been in Bitcoin and in the space for, most of them 10 plus years. So they're OGs, as you would call them, as the kids would call them these days. So what's happened with this specific Bitcoin treasury company, and there have been several of them launched, really with the same strategy as the MicroStrategy playbook, or as it's called now, strategy, right? They're copy and pasting strategy, which is, we're going to acquire Bitcoin on the balance sheet. They're going to hold it as an asset, really view it as a reserve asset. And then they're going to fund most of them, the capital strategy is with the capital side of your balance sheet, the liabilities and equity. You're going to use credit liabilities. You're going to issue credit to buy more Bitcoin, right? And that's what you've seen. It's kind of been the playbook for almost all of these Bitcoin treasury companies, right? That's in general, that's the strategy. And while strategy's executed on it well, it's been, one of the best, if not the best performer in the S&P mid cap indices it sits in. Not all of these Bitcoin treasury companies are created equal in their abilities to really execute in the same way that strategy has been able to. One, just because of the core business, right? Strategy has that operating company. They have 20 years of track record. They started with cash and equivalents, position that they built up from their retained earnings over 25 years. That a lot of these startups aren't beginning with from a cold start. And so what we've seen with Nakamoto, announced it was coming with a Bitcoin treasury company for a SPAC merger with this Kindly MD entity. For all intents and purposes, completely irrelevant, just some little healthcare operation in Utah. Doesn't matter as an operating company. But that really rode the wave of kind of euphoria that this Bitcoin treasury company phenomenon was getting from retail investors primarily in the secondary market. So its share price just ran up from $2 roughly before the merger was announced to high 20s, right? For essentially a 10x in a very short window, which is a spectacular return in that type of condensed time frame. Um, and then you also had the tail end of the Bitcoin conference in Vegas for kind of the U.S. or North American focused Bitcoin conference. And there's multiple of these. Like every quarter, there will be one of these rotating around the globe. But you also had a huge kind of tailwind of bullishness from just promotion at the conference itself. So that kind of bull wave, that you can see it in the chart, just massive positive sentiment and euphoria heading into this thing by mid-June. But the air has been gradually kind of being let out of the balloon. Starting from mid-June, that bullishness couldn't maintain itself, like by definition. Like the capital flows, eventually after that news and just the rush in from hot money dries up. Eventually, the price can't sustain itself and it starts to draw down. And that's exactly what you've been seeing with the NAKA NAKA shares since really mid-July. It became apparent as price wasn't going to be able to hold up and sustain itself at those very lofty valuations it reached, at the terminal phase of the May-June euphoria, right? And so you've seen a contraction of basically like 95% in that NAKA share from the June highs. If you look at where the volume was, where's all the buying? Well, it's clearly a lot of volume right now, like selling. There's a lot of trading taking place in this name. But really the retail buying, the public buying was coming in May, June at those highs, right? So what I'm saying here, like if you think about Bitcoin cycles, what everybody's gotten used to, 2012, 2016, 2020, et cetera, those halving cycles, those 4-year timelines, every one of those, every Bitcoiner knows you see a 80, 85, 90% drawdown, as the euphoria kind of like those capital flows dry up, and you see that correction taking place. We're just seeing that in the Bitcoin treasury company space, like that phenomenon is playing itself out. However, Bitcoin itself, while it's been there's been liquidity taking definitely since that all-time high, probably is it 5 weeks ago when it hit like 122,000 ish, that ballpark, low 120K range. It's been going through like a mini consolidation, but there's no collapse, right? It got down to 108,000. If you're in Bitcoin though, that's nothing, right? Like a 10% drawdown thereabouts, like that's a the not even enough to cause a flinch, right? As opposed to now those levels being added on top of Bitcoin, right? The Bitcoin treasury company is like think about it, it's capital, kind of it's a capital strategy on top of Bitcoin itself. You're seeing the volatility now show up on those outer layers. It doesn't mean you're not going to see, or you're going to see this in all of the Bitcoin treasury companies, but the Bitcoin treasury companies, including MicroStrategy, MSTR, their results have been kind of softened. You can see it in the charts since July, from my standpoint as a technical reader. Now, for setting the broader context of where is Bitcoin in this primary bull market wave? Are we done? Like, was 122K the top? Time will tell. but in a surprising way, I think this is actually good for extending that bull cycle in Bitcoin itself, like spot Bitcoin, the FX exchange rate. Why? You're rinsing out um, the most speculative capital flows. Like took massive losses here. Like for the people who got greedy, they came in late, they bought in May, they bought in June on, this Bitcoin treasury company. It's capital destruction, they just took, and, unfortunate, but this is Darwinian market competition in action. And there's certain things to go on I don't want to touch here as you dive deep, um, as far as insiders, et cetera. But by rinsing out the speculative froth, this actually, in my opinion, part of a mini consolidation on the zoomed out Bitcoin chart for this cycle. This actually helps extend the cycle and go further. And I know that's something that in the Bitcoin sentiment itself is not kind of landing in the messaging right now, as things like this are like what's going on in the NAKA equity trading is taking front and center, or the other topic is this core versus knots debate, everybody arguing over filters, all of that. The thing about the bull market, this is actually a very good thing to take a consolidation here. It extends your ability. It allows the Bitcoin supply to move into longer term holders or stronger hands, and ultimately go further and farther on a less volatile, chart on the underlying asset itself. So the other thing you're hearing for sentiment as well is just Bitcoin in the broader market context. You're seeing certain things like gold breaking out, breaking through that $3,500 level, trading $3,600, $3,700. Doesn't look like it's stopping at all. You're seeing the same thing in metals, silver, platinum, etc. And you're seeing equity markets generally hold up. So Nasdaq, S&P 500, setting at all-time highs on almost couple of times a week basis here these last few weeks. It would seem they're still hitting, as opposed to Bitcoin, which is not hit an all-time high in 6 weeks. That's definitely weighing on sentiment. But from my perspective, this looks actually like, from a cycle perspective, this development for the Bitcoin treasury companies running out of steam here. It looks like for at least the weeks or months, short-term type of time frame. That's, in a weird way, I know it's counterintuitive, but from a trading perspective, looks like a positive to me. Another note here, you're seeing, this is an article from the block today, 1 in 4 of these Bitcoin treasury companies is now trading below their Bitcoin holdings value. And this is where, you hear the market, right? Or the influencers on YouTube and X, like it's all about MNAV, right? Multiple on net asset value, or Bitcoin yield. That impacts the narrative right now when, some of these start to trade below par, if you will, or that MNAV of 1.
It can go the
Same
opposite
thing.
way very fast when you get below that. Yeah.
Yeah, and then it's similar thing for actual like operating companies. I won't name names here, but there are companies who have adopted a Bitcoin treasury strategy who run some other business. They're doing, they're making the Bitcoin play in a public market context, different than the strategy framework. But you're seeing a lot of them start to trade at a discount as well, where the market value of the firm and its kind of going concern operations uh, calculates out to a negative value when taken into context of like market cap minus the Bitcoin treasury holdings. So interesting things going on. I actually don't think this is a sign that the cycle is over. Bitcoin's dead. We topped at 122K. I think it's the opposite. You rinse some of the froth out, you get the most speculative buyers out. But my opinion, this thing is still moving forward in terms of its momentum in light of what seems like a pretty big drawdown for some of the people who thought they were getting Bitcoin exposure synthetically through these other Bitcoin treasury companies. So it really highlights the risk. Um, there are people who won't be tough to find influencers promoting the Bitcoin treasury offerings as well as their debt. But I think this is just one of those causes, step back for pause if you're an investor, whether you're retail or institutional, and realize that the Bitcoin treasury companies are not the same thing as Bitcoin. And each debt instrument you see offered, read the prospectus, because all of those things, know what you're buying. Don't just buy for a yield number, because it's that same thing you're saying. Bitcoin treasury companies are not Bitcoin. Understand your dollar credit instruments as well. But everything, as always in financial markets, it's you're in charge of doing your own due diligence. But let this example, hopefully, you weren't hurt as one of the parties who lost or took capital losses on, say, this trade. But let it be concerned, learn from other people's pain, and do your due diligence, know what you're buying, and all the above. But yeah, ultimately, it's a good time in a cycle to be an investor against the grain when you see events like this. These are actually kind of informative from a technical perspective or a trader's perspective of potential entry points if you're looking to be long. Doesn't mean buy Nakamoto. That's not what I'm saying. But use this as a kind of the counter-cyclical framework, the Warren Buffett quote: "You want to be the buyer when there's blood in the streets." Well, you want to be a buyer when sentiment is low. Buy low, sell high, all of those things. Not making any recommendation or advice for any security or any asset in general, but just that general framework. Want to leave our audience, keep those things in mind. But in my perspective, I'm still bullish on Bitcoin for the long run.
Great. Well, thanks for kind of running us through that, Matt. I think a lot of really interesting tidbits here, especially, again, I want to urge everybody to go back to the very beginning of this and rewatch through, re-listen through the section that Matt talks about, kind of the composition of the Board of Governors and how that actually flows through to impact rates, because that's a critical piece. Obviously, all these
Yep.
other items are also very important. We're kind of time stamping things as they come along. But again, I do think that that first section is really important.
All right. Well, let's do it.
Yep. Well, thank you everybody for listening to today's episode. We'll make sure we record another one next week. Like and subscribe. Do all those things. Reach out to myself or Matt online if you have any feedback, questions, comments, etc. We'd love to hear from you all. So thank you again. Have a good week.
All right. Take care.